right. Thank you so much, everyone, for your time today and for inviting me to this webinar. As a quick introduction of who I am and my background, I'm a tech engineer who started my entrepreneurship career in San Francisco. I started creating a ticketing and hospitality company in San Francisco back in 2017. That was really the peak of the startup era, I think, in San Francisco, 2013, 2017, with Web 2.0, 3.0. I think everything slowed down a little bit during COVID. After my first very small exit in San Francisco, I moved to London to create a second company that was more in fintech. We were doing sentiment analysis and market analysis for the cryptocurrency market. What happened is I had to recreate all of my network from scratch in order to raise funds again. And to do so, I created some process to reach out to investors outside of my network. Eventually, we could not find product market fit, but we raised our seed round in London. And so I decided to productize that process I built for fundraising, and that became Angels Partners, a company I'm currently working for at the moment, where we help companies connect with relevant investors following a defined process. We've been helping thousands of founders in their fundraising across the world. We're focused on mostly like English-speaking countries from USA, Canada, UK, Australia. And we've been working with founders to help them connect with investors outside of their network. As a founder, you always want to start with people you know. We call the 3F: friends, families, and fools. And then from there, where do you go? How do you convince someone to invest in a company when they barely know you? That's precisely the pain point we've been working on with those founders. First thing first, there's a high percentage of companies who cannot raise funds. Because they don't have the network, because they're not ready. So, how do you get to a point where you're investable? It's not necessarily about your metrics and your traction, though it helps having solid metrics. It's about how you approach your round and your fundraising. Typically, I think what you need to realize as a founder is fundraising is a full-time job. You cannot spend just 10% or 20% of your time raising funds. So it will put the company in at stress if you're still, if the company is not, if you're not able to delegate some of your tasks, and if you're still building. So how do you circumvent around managing a company and fundraising? This is something you have to go through as a team. Clearly, we've seen founders, at Angels Partners who were building their company part-time aside from their main full-time job. I think that doesn't work. Investors will want to see a team of founders who are fully committed into the project. I'm myself a solo founder. I think being a solo founder has more drawbacks than advantages. The main drawback is all the responsibilities come down to you. So prepare to be working extensive hours throughout the week because you'll have more work to do on you. You also have less brains to decide and to discuss a problem. So, how do you know how
What
to go around a given problem? Usually, investors like to see a team. I will say it's a drawback to be a solo founder. They want to see a team of people with experience in your market, people who have who are complementary. So if you're a solo founder, you don't have that. So you better be extremely skilled at what you're doing, extremely committed, and you have to show that you've already been able to achieve so much. Ideally, if you already have a team behind you, that will be a huge plus. If you're a solo founder with no team and you're still building the product, it will be harder, much harder to convince investors to invest. So I will say before you start speaking to investors, if you're a solo founder, try at least to build a team you will be able to delegate some tasks with in order to show investors that you made some progress. You've been able to move on from step one to step two, where you have a team of people who are achieving some of the work for you while you're fundraising. To continue on the fundraising process. So typically, the what fundraising will look like for any founder will be to first contact people they know, then uh, number two will be to try to access your second degree network. So ask everyone you know for an introduction to another investor. I think the goal here is to, and then and keep on going with people you've been introduced to. The goal here is to never arrive at a dead end once you're introduced to an investor. So if one of my good friend is passing on this opportunity, but introduces me to, let's say, one or two more people. Try to make sure that these investors, if they don't invest, at least they can refer you to someone else, because once you reach a dead end, you're starting to limit the number of opportunities you can get from your own network. So always try to keep pushing on the introductions you can get from the people you've been introduced to. Now, how do you get about contacting investors that you don't know? Which is usually 95% or 99% of the investors that you have to reach out to. So most founders, how they go about it, they'll just like create endless investors list, try to reach out to these investors like cold emailing or via LinkedIn, which usually leads to low response rate. They have they might not be they might not have the right messaging. Each investor needs to have its own messaging based on the industry, their experience. You want to be able to relate to what they're working on, their fund, one of their previous investments. Typically, LinkedIn will be a great source of information. So what we usually do is try to scan their LinkedIn network, the latest post, or on Crunchbase, uh, the previous investment they did, and see if you can relate to one of these information, and use it to create a hook, to create context, and demonstrate that you've been doing your research, which in turn will help you boost your response rate and engagement from these investors. Another mistake that founders do is to create like these long Excel lists and then try to manually contact these investors and follow up with them. I think that's the old way of doing it. Now you have tools to help you automate part of the outreach. AI can also help you a lot creating that right messaging for each investor. I mean, it will help you save a lot of time. That's very recent, all of which we have deeply integrated into our platform in order to really follow best practices and help our community of founders maximize their efficiency in their fundraising. Um, and what you should also do is search in your LinkedIn network if you have acquaintances who could make an introduction to an investor. So typically how you go about it is you will search for an investor on LinkedIn and see who can make an introduction, what are the introduction path to these investors, and then contact these people on LinkedIn, see if they can help you make an introduction, even if it's someone you don't really know. Especially in the US, people are more open to helping each other and making connections. It's also a way for them to work on their network. Of course, they will not back you up if they don't know a little bit about you and your project. But if you spend a little bit of time on it, you can easily try to generate more introductions. Also, ask other founders. We noticed that one of the best ways to connect with an investor is if you're introduced from another founder, whether they a founder they invested in or a founder they just know. And that's why we created a community of founders to help each other out with mutual introductions to investors because it's such a powerful way to get in touch with an investor. So ask founders around you, try to contact founders who have received an investment from an investor you want to reach out to, and don't ask for an introduction straight away. Ask for advice, ask for information about this investor. Try to create a genuine link. I mean, it takes time. It's so much easier to just like cold email that investor and hope for the best. But the reality is, if you want to create a genuine connection between you and the investor, it will take time. You will have to work on a human connection between you and this investor, but also you and the person, this connector that can help you get an introduction to this investor. What else?
Yeah, can I
Mhm.
ask a question,
Of
if
course, of course.
possible? It's more of an observation and another little question, if I may. I completely appreciate, how much time, we all have to spend as founders on reaching out to, potential investors. However, the things that I've experienced along the way in doing this is the lack of communication you get back from people, whether it's a yes or a no.
Mhm.
That's that's what I find extremely frustrating. You can go onto LinkedIn. I've got a huge network of people on LinkedIn. I've approached many investors who I know, who I 100% know would be interested in our platform, but you get nothing back, you
Mhm.
know, and it's as though they're not actually there. So they're
Right.
promoting themselves as investors, but when you send them, a normal, not an outreach or anything like that, just a normal message from yourself personally, the chances are getting something back from them are very, very slim. So I completely appreciate what you're saying in terms of, yes, you've got to work at it, you've got to keep on doing it, it's a numbers game and all of that kind of stuff. But there comes a time where you've got to say to yourself, am I doing this right? Is this a waste of time? Is there a lot of, is there a lot of noise out there? Do investors like to just say that they're investors for the sake of them saying that they're an investor, and it gives them credibility? So, that's sort of one of the observations, that I've made. And, we're talking to a number of investors at the moment, but what we're sort of looking for, and we get approached by companies like yourself all the time saying, we can introduce you to these investors, we can introduce you, but we want this amount of money up front. And I've made that mistake in the past, and I've paid up front for, sort of connections and introductions and everything, and we get nothing. So, as a founder, and I think I can speak on behalf of other founders who find this extremely frustrating. That there's so many founders out there looking for funding, and sometimes feel we're actually being taken advantage of because they know that we really need the funding, but they feel that they can charge us upfront monies, to give us a list of introductions. So that's my sort of observation. And my question is to you, how do you differ from all of those other companies out there? Because I think we all have very, very interesting, opportunities and products in different sectors, I might add. And the thing is, an investor wants to invest in a certain area, so it's sort of, it's sort of, you know putting the, getting to the right person or company who wants to invest in the sector that you want to, because it only takes one person, right? As you well know better than
Absolutely.
anybody else, it only takes one person who goes, right, yeah, I love this, etc., etc. But what you've got to do is you've got to dwindle them down, to try and find the person who wants to invest into the sector that you're working on. Because I prefer
I
to speak
agree.
to five. I prefer to speak to five people, right, and build a relationship with those five people, rather than sending, an email to 1,000 people where you just get you know, a load of rubbish back.
Andre, I think when you're a founder, you need to open all the doors and create as many opportunities as possible. And I've seen founders who have been trying different strategies. So they've been working with us, they've been working with some of our competitors, they've been hiring an investment broker to make introductions. And maybe half of them or 80% of them will not lead to results in some extreme cases. But as you said, you only need one investor to invest to make all of your efforts worth it. And I think founders should try everything they have, especially if they reach a point where they don't know how to reach out to the right investors. They shouldn't limit themselves to just one service they think is best. They should try everything possible to be able to complete their run. And what we've seen is that founders who actually try literally every solution on the market end up having the best results, because even if only myself or just one of my competitor will be able to provide or to generate a lead to that one investor, then all of the efforts and all of the risks they've been taking with services like myself will be made worth it.
Okay,
I'm
lovely.
going to say one thing. If you know these people, Andre, remember a lot of them are going to be getting thousands of thousands. If you've got the word invest in front of you, behind your name, you're going to get thousands of communications from people like you. Dice it up a little bit, change it up, ring them, say, how's things, blah, 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 what you're up to. But I worked with a founder recently who raised 250, and they raised it without too much stress because they did all of the homework beforehand. They used Bohurst data. They looked very carefully at what their sort of competition investors, what invested in sort of similar products and services, what they was offering, and they absolutely smashed it. They raised 250. They're now getting lots of revenue coming. So yeah, it's all about that. It's all about the context, but change it up. Get out to these networking. We went to a fantastic networking event the other night at Brown Rudnick. Is for clean tech, and yeah, it was. You can see people going in there doing a really fabulous pitch in front of people who have actually want to invest. They invest in similar companies in the past, and they're there to talk, and they're there to really take an interest face to face. Don't ever forget how important that is.
Yeah, I
Sorry
agree.
for
I agree with that. It's huge. I mean, personally, I'm pretty much out there, and I do a lot of that. I mean, in one respect, our product wasn't right to raise funds in the last sort of six to 12 months anyway. So now is actually the perfect
yeah,
time, because, as we're just about to launch, the eighth door,
yeah.
relaunch it, in the platform, both in the UK and globally. So it's quite an interesting proposition now.
Laura, You got a thanks, Andre. Laura, you got a question
No problem.
first. Go ahead.
Yeah, hi, good morning, everyone. Thanks, Johan. It's really interesting. So, funnily enough, Mark and I have been talking about this week, and anyone that knows us has known, like, we've with the group for a while. Fundraising has been the thorn in our side. So I to hear the frustration in Andre's voice. We sympathise with it deeply, and I suppose a few things that I kind of thinking about. I think there's a code with investment that is really frustrating for founders because we sort of don't understand what the rules are. And one of the things that I've kind of realized over the last 6 months is that there's a whole timeline of stuff that's happening behind the scenes that if you just don't hit the right person at the right point in their funnel, it's really obvious when you sort of say it out loud, then they're not interested in you. And then there's so much kind of serendipity to it. And I wondered, Johan, from your perspective, if you can kind of shed some light on what that code might look like, if there are points, as we're doing research, if there are points, or whether it's just a case of like hammering it out. I think the follow-up is also important. Too. One of the things that Mark and I have been talking about this week, because we've kind of hit a new level for our business in terms of some validation, which I think has been a bit of a game changer for us. And also, it's just occurred to me, sort of as I'm sitting here listening, like for Mark and me, we still feel like we haven't really succeeded with the fundraising, but we've raised 250,000 this year, and
Correct.
it's where it's what the targets are. So, we understanding a bit more about the code. What are the secret signals that perhaps investors are giving out? When we see investors in the press, is it already too late? Have we missed the boat that they're in the press because they've kind of moved through those sorts of pieces? And I think the challenge for founders when you're doing that outreach, you invest so much time into it and you really, you recognize absolutely that's the part of your sales funnel fundamentally. How you connect with that customer is the right thing. So giving a bit more light in how you sort of instrumentalize that process, what the balance is, what is enough of a hook. And one of the little bits of work that I've done over the last couple of months is just like, okay, what is the language of investors? What what are the phrases that we should be using that indicates, okay, stop and read? Is it as simple as don't describe your business model like this, describe it like that, and that becomes a powerful hook.
Mhm. Sure. So, look, Andrea was mentioning earlier that every investor have the specificity as per the industry, stage, type of investment they make. But in reality, when you look at, for example, their investment criteria online, whether it's on their websites or on Crunchbase, it might give you a broad idea of the type of investment they make. But then if you end up speaking with them, and we spoke with every investor we onboarded to better understand their investment thesis, then you understand the subtlety of what they're really looking for. And so I think the first thing to do is to better understand the investors you're reaching out to. For example, two climate tech investors will invest in completely different type of companies. Some will invest in companies that I remember speaking with an investor who thinks that a lot of clean tech projects are unsustainable unless they're backed up with government. So they're looking for very specific type of clean tech companies. Other investors might have a different opinion about this. So first thing first is like know your investors, do more research on them so that when you knock at their door, you have a higher chance of resonating with their investment thesis. Number two, you need to be ready and to show that you know your market. Investors know their market. If you approach an investor and either you don't know your market, or you're too similar with another company, or someone else tried it and they're aware of it and you're not, then it will shut down the door for you. And you might just get a no or no response. But the reality is that they know that someone else tried, or that there's been another company who's doing something too similar. You're not differentiated enough. And just building something without being too knowledgeable about your market might just be a waste of time for you and for them. We've also seen when investors get approached by founders, they receive their investment deck, they receive information about the founders and the team. They'll make their own research, but I think it's a bit like when you're looking for a job, the way you're presenting needs to be neat and perfect. If you make just a single mistake in that initial presentation, you might lose an opportunity. And we've seen investors who are rejecting investment deck just because on the investment deck it says I don't know, March 2025, and we're in September or October, and they'll realize that first they're not the first investors you're reaching out to. Second, you're not paying attention to detail, and third, you've been raising for 7 months. Which is not, which might just close the door for you. And those are like all the little details you need to care about when you reach out to investors. So first, pay attention to details, have a very deep understanding of your market, and know your investors, and do some like deep research on them, whether by asking other founders who've been in contact with them, or by going a bit further than just the information you find on Crunchbase. Does that answer your question, Laura?
Yeah, a little bit. I mean, I think that, and I think the point about attention to detail is a really important one. But I think a lot of there's any founder that's been raising for any period of time, we've gone through that piece of like, you know, knowing the industry, trying to understand who they are, making those differentiations. If we're still hitting a wall, how do we know what it is that we're doing wrong? And I think there is a big part within this process that you can't answer, because it could just be that the proposition isn't investable. And I certainly know through my founder journey, there have been points where I've been really frustrated to be told that my proposition isn't yet investable. When I've then hit the next stage, I'm like, now I get it. Now I see why someone was pushing back, you know. So I think that within this process as founders, we really do have to have that humility that someone is not necessarily going to spoon feed us the answer as what we need to do next. It's our business. We need to figure that out. And I think that's an important piece, because otherwise we're not pushing forward if we're just frustrated that no one's investing in us. But with all of that being said, I think that there is an opposition, it feels like, between investor and founder, that we have something that we deeply believe in that may well and hopefully is innovative. Like that surely is the best kind of investment, that you really got something groundbreaking, innovative, new. However, you have 30 seconds to let somebody know its potential and to hook them in. And so it's a case of what is the message? You know, we've talked about this a lot on this group, that you're so in your head of like what the product does and how it does it. And actually what somebody wants to know is, what is it going to do for me? So it's that flip change. What is it going to do for me, rather than what can I do? What does my tech do? And I'm wondering if there's a lesson here about a flip change between, I need to tell the investor what I'm going to be doing for them, for example, or I need to be saying to the investor, I'm saying to the investor, high growth potential, great traction. And actually what they want to hear is validated, clear sign of sight to this. You know, is it just our language choices are wrong? Because we're talking as founders and business owners, and they're investors, and they want us to speak their language. They're not going to speak
Absolutely.
ours.
I totally agree, and I think too many founders try to sell a product first, especially early stage founders we've been working with. They're trying to sell a product or solution to a problem, but they are not selling a business. And indeed, always think about what's in for the investor and how they'll make their money back. So I agree with you on this, and I think when you're an early stage founder, going through a startup accelerator, if it's one of the first company you're building, is essential because they'll help you adapt and acquire the mindset of an investor in order to speak the same language as they do. Maybe I'll take one last question and then I'll have to jump off.
Shall I ask then? Yeah, I can ask then if you like.
Dan.
Hi, thank you very much for that. It was really interesting. We're currently, I've got two companies, DAP Consultancy, which is CX consulting business, and my other company is Pure One Group, which we're a travel company and travel and leisure business. So currently with Pure One Group, we're looking for investment. We're looking for 225,000. So not a huge amount, but the challenge that we've had so far with potential investors is that certain things attract really some people, and then those same things might put off somebody else. So for example, we're looking for money to improve our travel and leisure business, but further down the line, we don't want to just be offering travel for an online platform. We want to potentially have little boutique surf shacks or little boutique hotels or potentially even high street stores, but that's much further down the line. But when we've explained that to give our future vision that we want to grow, and that sometimes scared people, but then others, they've been really impressed because they can see we're thinking of diversifying our portfolio, diversifying our revenue further down the line. So what advice would you give on that? Because we're also looking at creating like a SaaS product as well. So rather than using an online off-the-shelf booking tool, which we use at the moment to book holidays, we're going to create our own because it's my co-founder is an AI expert and he's built AI tech companies. So that's something we can do, but that's not our core objective. So how would you do that? Because like I said, talking about certain things like that is really encouraging to some people, but others it's put them off completely.
Sure. I mean, unfortunately, every investor is different, and you can have an approach might work with investor A and might be a complete turnoff for investor B. I don't think there is like any secret recipe to be able to sell your business. I mean, considering, I mean, if you've done all of your work and you're investable and you have your documents ready and so on, like if you even followed like all the general guidelines to be able to have a chance to trigger an interest from an investor. But every investor will be different. So with some investors, yes, you'll, especially like across borders, like some investors will want to hear about your vision and the plans you have over the next 5 or 10 years, and they want to see something very ambitious and how you make 100x return on investment for the next 5 years. Spoiler alert, that's probably like more US investors. But with other sort of investors, they'll want to see something a bit more down to earth, more realistic. How you're going to achieve just like simply entry to market strategy, and they want to be convinced that you're just going to be able to make the next step. And if you sell them like a 5 or 10 years plan with a 100x return, they might be turned off thinking that it's extremely risky and the chances of succeeding are pretty low. So unfortunately, there is no, I would say there is no one size fits all. I think in terms of like a human relationship, you have to be able to understand, the type of investors you have in front of you, and what language, what approach you might want to have in order to be able to really resonate with this investor thesis. Thank you, everyone. I hope it's been helpful.
Thanks, Johann. Very.
Okay, thank you for the invitation. Thank you, Andre, for the challenge. I hope I've been able to answer your concern.